Welcome to the Homeownership podcast presented by Movementum Realty, located in Hanover, Massachusetts. This series covers all things real estate and the best practices for buying, selling, and owning property. Now here is your host, Sean Maloney.
Welcome to episode 230, Why Get a Pre-Approval? I'm your host, Sean Patrick Maloney. Thanks for joining me this week. This week I want to talk to you about the ins and outs of a pre-approval. What's the point in getting one ahead of time? Is there risk? Is it a bad thing to do it? Is it a good thing to do it? Is there a difference between the two? Shouldn't I just start looking, figure out what I like? Couldn't I come up with my own budget? So many questions, so little time, so let's get right into it today. On almost every single real estate related website, there's mortgage calculators that help you understand what you can afford. Sometimes you'll be on Zillow, you'll see it'll tell you your average payment. Other times Redfin, you can go on to everything from bank.com to whoever. They all have their own calculators. The problem is most people don't know the numbers to enter. Say for instance on Zillow or Redfin or a few other sites, they tell you what your payment would be. Have you ever clicked on that payment and looked at the factors they're using? Typically, when you load a page on Zillow, they're going to use 20% down payment. Are you using a 20% down payment? If not, adjust it. Look what happens to the payment. So when we look at these mortgage calculators, it's not that we can't do them. The educated consumer that takes the time to look at their pay stubs, to really look at how much money they're making, to look at what their down payment is, look at what their interest rate is, look at what the taxes are, look up each and every one of those factors, then put it all in, the mortgage calculator will be accurate. But by talking with a mortgage professional, they're going to tell you the real numbers. They're also going to know the different caveats that are involved. Is there different reasons that different monies are included, excluded? Child supports and alimonies, and it's just so many reasons we could be taking in, two jobs income. There's just so many variables. So by talking with a mortgage professional, they're the ones who are going to give you the real answers and allow you to formulate a budget. When shopping for a home, even if your budget goes down, say as little as $10,000 or up $10,000, think about it. $10,000 is enough to buy you that paved driveway. Instead of having a gravel driveway, you could have a paved driveway. Or imagine you don't have that $10,000. What if you needed a fenced-in backyard? $10,000 would actually fence in quite a significant area in a backyard. So when we look at the up and down by $10,000, it doesn't seem like what I just said made any real difference at first, right? You're thinking, okay, well, even if my mortgage calculator misses by 10 grand, it's not really that big of a deal. Now I just showed you it could be the difference in a paved driveway, could be the difference in a fenced-in area, could be the difference in upgraded bathroom, it could be the difference in having upgraded countertops. There's so many places that $10,000 would do huge differences to your home, so don't discredit it. Understand that that's why the mortgage professionals want to meet with you right away, is to help guide you towards the right homes to shop for based on your budget so that you don't get into a situation where you're looking and you fall in love and you find out you can't afford it, or worse yet, you look and you're not finding anything, all to find out that you've been wasting your time the whole entire time because you've been looking at homes less than you can afford, and you actually let one that you loved pass by because you thought you couldn't afford it because you pre-approved yourself. Now, also, let's go further into it. In order for sellers to take your offer seriously, we have to have some sort of proof of funding. If it's a cash deal, the proof of funding might be photos of a bank account. They could be 401ks. They could be equity in a home. You can look at lots of different ways to prove that we have the cash to buy. But if we're not a cash buyer, we use what's called a pre-approval. The pre-approval is the letter that comes from the mortgage professional that says, I've looked at these factors, usually credit score, income and assets, and then they give the pre-approval. Whereas without the pre-approval, you can put in an offer. There's no rules against it, and there's no laws or anything that says a seller can't accept it. But in the business, we're probably not going to accept the offer. The seller's not going to accept it until they see you pre-approved. The only time I've ever seen any of this stuff work without it is when you have a seriously distressed market and sellers are just grabbing at anything that comes by. But in a market like we've been in for the past 5-10 years, I haven't seen anybody ever get an offer accepted without some sort of proof of funding. So don't be cut short by falling in love with a house, not having the pre-approval, realizing you can't get one at the moment you need it, and lose the one that you love. Because houses come and go, and the best houses always sell very quickly which means if you're not prepared with your pre-approval, even if you got to wait a day or two, what if someone comes in and puts in an awesome offer that you were going to put in, but gets it accepted before that paperwork even comes? Now, on to the fun part. A lot of people talk about, well, I don't want to get a pre-approval because it's going to hurt my credit score and everything. Well, I'm not giving credit advice here, folks. Talk to the mortgage professionals. But from what I'm told from them, it has little to no effect on your credit score. And it's also normal for people to get pre-approved by more than one bank. 1, 2, 3. I wouldn't go out and get 5, 10, 15, 20, something crazy like that. But in buying a house, the educated consumer knows that interest rates matter and different things like that. So by looking at 1, 2, 3 different options that you may have a better price, saving you money. So the banks know the educated consumer is looking at houses. It's not abnormal for people to need to get a pre-approval, folks. It's a standard part. It's not saying you're going to spend the money. Later on in the process, once you move forward, there is points where really it starts to get into your credit report, but that's as you're activating the loan, not as you're getting pre-approved. Guys, if you need a resource to get pre-approved, reach out to us over here at Momentum Realty. We have lots of different trusted mortgage professionals that we can advise you towards to help you find the right one, to find you the best rate, to find the best budget to get that dream home you've always wanted. Thank you so much for listening today. I hope this helps you understand why it's so important to get a pre-approval in the early stages of the shopping process. Thanks again and have a great weekend.